What is up? So I want to show you guys this, and it is all regarding the Fed mortgage rates throughout the rest of the year, meaning quarter four, recession, and when to get the best deal if you are buying a home. Really important. We'll dive into it. So want to first put a disclaimer out there. I am not by any means a market analyst. I'm not paid to analyze the market, but this is my job. I am a student of the game. I do study it. And so I think it's really important to rely on facts and facts alone, which is what we're going to do here. So guys, we have gotten a ton of questions about, I think this is a major concern across real estate agents, home buyers, people of, pretty much every facet of our industry and what we do, saying, Rob, what's going on with mortgage rates and the Fed cutting the Fed rate, right? Like a lot of people, this is a very hot ticket item that they want to know about. So I'm going to really simplify the data for you guys. And I think it's really important. Like that's really all we're going to talk about here is just the data and what the market indicators show. So if you guys remember last year, I think it was actually, September 18th, the 3rd September of the month last year, the Fed cut the Fed rate by 0.5%. If you didn't hear me, the Fed cut the Fed rate by 0.5%. Massive cut to the Fed rate, okay? And there was all this anticipation about it. So if we look back to June, which is when you can start seeing articles where it was, quote unquote leaked, but it's really a paper move that back in June of 2024, the Fed started releasing statements saying that they were likely going to cut the Fed rate in September. All right. And they promised multiple Fed cuts, throughout the rest of the year. And then into 2025, they said that there's possibly going to even be 8, right? Like there were all of these promises made. So guys, let's look at the trend. And this is Mortgage News Daily. It's not any sort of skewed information. These are just the average interest rates at that time from May 29th. All right, rates really start to plummet. We go from an average of 7.34, and then here we are, we're in August, and we hit a super low here of 6.40. I mean, keep in mind, that's a full 1% that they've gone down at that point. And then we just continue downward, and actually make our way all the way down to the average being 6.11% on September 11th. September 11th, all right? If you remember, I told you that the Fed cut the Fed rate on September 18th. So that week, in anticipation, what happened is reality set in, rates actually start to spike, and as we see here, September 18th, there's a solid little spike on the day that they actually cut the Fed rate, and what we realized is that, oh gosh, inflation's not actually at the point we need it to be to justify this Fed cut. Guys, this was all a paper move. It was all a consumer confidence paper move to get the interest rates lower, to get people excited about the economy, feeling confident about the economy, money in their bank account, the price of groceries, gas, things like that. And it drove mortgage rates lower. So the question is, all right, we see that as of September 18th, the average rate is 6.15. And then here we are, fast forward to January 13th, we're back up to 7.26. So interest rates literally over the course of about 4 months got over 1% higher. So who got the best deal of 2025? People that went under contract in June, July, August, and closed within 30 days of, September 16th, right? Closed within 30 days of September 16th. So the message here is, do not wait to buy a home for the Fed to cut the rate, because if history repeats itself, we will not see a massive improvement in interest rates. I mean, if we do, we're talking very, very minimal movement downward. Maybe 1/8%, which, just so you guys know, on a $300,000 loan, that is an equivalent to about $18 less monthly, $18 lower monthly payment, and 1/8% lower interest rate. So looking forward into 2026, I think I'm not going to spend a lot of time on this, but if we look at real recessionary indicators, this is the Fed rate, okay? The Consumer Price Index, the CPI. It's one of the most highly esteemed measuring indicators for not only the Fed rate and mortgage rates and how all of that's intertwined, but recessionary indicators. So when we look at 2019, I want you to look at basically the last 6 or 5 months of movement, 0.2, 0.1, 0.2, 0.3, 0.3, 0.3, and then we have 0.2, and then boom, recession kicks off in 2020. When we dive deeper into where we're at currently, we kind of see a very similar trend here towards the end of 2024. Oh, wow, 0.00122, they cut the Fed rate, meaning they thought that they were going to be triggering a recession. Here we are in 2025, 0.4 at the end of 2024, 0.5 January of 2025, and all we're talking about is the trend here, the movement. 0.2 increase, negative 0.1 decrease, 0.2 increase, 0.132, and what that looks like to me is that we are starting to get to the point where inflation is slowly increasing. It's tapered off, and we're going to head into a recessionary time period, which is what you see right here. We go 0, 0.2, 0, negative 0.5, negative 0.8, negative 0.1. So, guys, I believe that the break is really right on the cusp. However, your buyers will not be getting a better deal if they choose to wait until the Fed cuts the Fed rate in September. So if you have any questions, please shoot me a DM. Y'all have a great week.